Every boom, every crash, every emotional high and devastating low in the stock market. Did you know they all follow the same psychological cycle? I'm Barry, a financial technician, and today I'll show you how the famous Wall Street cheat sheet reveals the emotions driving every market move, so you can master your own trading decisions. The cheat sheet is a simple visual that captures the full emotional rollercoaster of investing, from disbelief after a crash to hope, optimism, thrill, euphoria, and then all the way down through complacency, fear, panic, and finally depression. It's not just theory. These emotions are repeated in every market cycle, whether it's stocks, crypto, or commodities. Investor psychology doesn't change, and that's what makes this framework so powerful. Behind me, you can see the Wall Street cheat sheet. I have created an interactive version in TradingView. Click the button or link below and take a copy for yourself. It starts with disbelief. After a crash, confidence is shattered. The market ticks higher, but investors think this is just another fake rally. Most stay on the sidelines, afraid of being burned again. Then comes hope. A few traders return, testing the waters. Small gains spark conversations about recovery, and optimism starts to build. Next is optimism. Analysts upgrade forecasts, financial media turns bullish, and more investors pile in. People begin to trust the rally. Then we reach belief. Confidence turns into conviction. Investors commit more capital, convinced the bull market is solid. Risk-taking increases, and buy the dip becomes common thinking. That flows into thrill. Prices rise fast, portfolios look unstoppable, and every dip is a buying opportunity. Investors feel brilliant, as if they've mastered the market. At the top sits euphoria. This is the danger zone. Headlines talk about a new era, everyone's making money, and people fear missing out more than they fear risk. But while confidence is at its peak, risk is at its maximum. Then comes the turn. Complacency sets in. Investors see prices stalling, but dismiss it, saying, it's just a healthy correction. But the slide deepens into anxiety. People worry, but hold on, hoping for a quick rebound. Denial sets in. Investors refuse to believe the bull market is over. They double down, certain the market will bounce back. When it doesn't, fear spreads. Losses grow, portfolios shrink, and confidence cracks. Then comes panic. Investors rush for the exits, selling at any price to stop the bleeding. Capitulation is when hope dies. Investors give up completely, often selling at huge losses. Painful moments when many investors give up. Afterward, the anger sets in. Anger at the market, at institutions, at themselves for not seeing the signs. Finally, depression. Confidence collapses. Many swear off investing altogether, saying they'll never return. And yet, out of that despair comes disbelief once again as the market quietly begins its next recovery cycle. The loop repeats, because investor psychology always does. What makes the Wall Street cheat sheet so valuable is that it exposes the repeating nature of investor psychology. No matter if it's stocks, crypto, or housing, the emotions are the same. By spotting where we are in this emotional cycle, you can better assess risk. If the market feels euphoric, you know danger is higher than most investors think. Recognize sentiment extremes. Panic and despair often mark bottoms, just as euphoria and thrill mark tops. Avoid herd mentality. Instead of following the crowd into dangerous trades, you step back and see the bigger picture. The goal isn't to predict every tick in the market, it's to develop awareness so you know when emotions are clouding judgment and when opportunity is quietly forming. That's why I always combine the cheat sheet with technical tools like charts, volume, and sentiment indicators in TradingView. Together, they give you a clear edge. And when you combine this psychological roadmap with tools like TradingView, which gives you real-time charts, sentiment analysis, and a global community of traders, you gain an edge that goes far beyond emotions. Don't forget, I have created this Wall Street cheat sheet in TradingView. You can access it for free using the link below. Okay, so how do you apply this knowledge? Here are 3 steps. Identify sentiment extremes. When everyone's euphoric and headlines scream, this time it's different, risk is at its highest. Conversely, when panic and despair are everywhere, opportunities start to appear. Combine with technical tools. Use moving averages, volume trends, and support and resistance levels to confirm where we might be in the cycle. Don't rely on emotions alone. Always back it with data. Plan with discipline. Set stop-loss orders, define position sizes, and create exit rules before you enter a trade. This keeps you from getting swept away by fear or greed. When you put these into practice, the cheat sheet stops being just a fun poster and starts becoming a decision-making tool. So remember, markets move in cycles, and emotions drive those cycles. From disbelief to euphoria and back again, the Wall Street cheat sheet helps you recognize the emotional traps before they catch you. Combine that with disciplined risk management and the right tools, and you'll trade with clarity instead of fear or greed. If you like this, don't forget to hit like, subscribe, and tap the bell button to get notified of future videos.